Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter, November 4th, 2023. Remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, oh my gosh, we just had the best week this year. Unemployment number a positive, a benign Fed meeting this week, great news from the Treasury about fewer long-term bond sales, a huge week of earnings, a decent Apple quarter, and a soft landing unemployment number. Folks, it doesn't get any better than this. The indices were up between 5% and 6.6% all in 1 week, and all the positive performance in the year tends to happen in a few weeks, which means you want to stay in the markets and you don't want to trade the markets unless you do a little trading on the side, but your main portfolio should be in the market all the time, because there are ways to hedge it if you can't stand the heat, and I don't blame you, but we do have ways of hedging. Anyway, weekly stock analysis video. The Paycom says things are slowing down, and revenue is thought to be dropping 6% on this great stock, and so the stock fell 40%. Now, does that make any sense at all? All right, think it may be a little overdone? Yeah, we think so. And after all, it is earning almost triple than it was making last time it was down at this price back in 2019. You got to see this, folks. Paycom might be a buy in here. And for those of you who don't want ETF hedges on all the time, now is the time to take them off and let those top stocks rock and roll. The top stocks gained more than 10% this week alone, doubling the S&P. Now, here are the volatility bands, and we can see the market came down here and it started up, and we thought it would have to make another test, but it didn't. It just kept going straight up past the 20-day moving average, and now it's on its way to the top of this band before it even pauses. And down here we can see this intermediate term indicator turned up, and folks, this could be a very, very big buying situation in here. And we want to look at this in greater detail in the next slide. So let's go there. Now, this was from October 20th, right up here, October 20th, and we were worried about the S&P 500 breaking down through this 200-day moving average. Very, very bad situation. Up here, this intermediate or this short-term indicator was pointing down, and down here, our intermediate term indicator was getting ready to turn down. So things looked terrible just 10 days ago. Now, what has happened since then? Well, wow. It certainly did break through this 200-day moving average, and folks came all the way down here. But then we got this short-term buy signal on the short-term indicator, and look what happened. This market turned around and just shot back up, shot up through the 200-day moving average, shot up through the 50-day moving average. Now, the thing we don't like right in here, hate to burst this bubble, but we have a gap here, we have a gap here, and gaps tend to be filled, so we have to be leery of that. But down here, now look at this. This indicator, this is our intermediate term indicator, which I showed on the last slide, pointed up, and this is made a higher low. So this indicator made a higher low here while the market made a lower low. This is a classic bullish divergence. So we are firing on all 8 cylinders, and if you had an old Jaguar, it might be a 16 cylinders. We're firing on all 16 cylinders, folks. And if you have an electric car, I don't know how to compare that to the market. But anyway, we're going up, and this is very, very nice in here. We just love it. Now, we showed you a chart a couple of weeks ago, and this was October 26th, so it was about a week ago, where one technician came out and said the rising trend line has been broken. Now, we did a letter saying it depends how you manage this line, because they took it from the bottom, the low, and went through this line here and up to here. But if you take it from right here, it's hard to see. Let me draw this arrow here. If you take it from here and draw this line, it did not break the line. So it depends how you measure it. And some technicians get really squirrely about a little break of a line. And I remember reading one time in a technical book about how some technicians actually took a magnifying glass out and looked at these things. Folks, you don't have to get that crazy with this stuff, especially when we were forming that double bottom on the short-term indicator. So this is the line that we said the down line has not broken that rising trend line. And folks, boy, what happened? Yeah, this was the bottom I was talking about forming here. This market took off like a rocket. What a wonderful, wonderful week. So, folks, everything is good out there right now, so enjoy your weekend. And for those of you who have put protection, very, very happy. The market went down to this point, and these puts were worth a lot of money, but the market has taken off now, and we didn't have to use these puts, which is always good. But if you have these put protections, you just leave them in place. Some of you leave them in place all the time. And when the intermediate term indicator turns up, some of you start getting rid of these puts until the market turns around again and gives us a signal that it's going back down, which it doesn't look like it's going to happen right any day soon, at least for another week or two. And don't forget, we have the holidays coming up. So we have a lot of positive things going on out there. So if you have put protection all the time, you keep these on. If you don't want put protection on all the time, you just want it when the market signals it's going down, then you start taking these off, take a few off, or take one off, or however you want to do it. It is up to you. That's what's so good about this. So if with portfolio protection, then you're protected all the time. You don't have to worry about the market at all. So, folks, we had an excellent week this week, best week all year, and maybe even a couple of years, because last year was no good at all anytime. And, folks, things are looking good. Go out, be happy, clear your heads, and guess what? We'll be back here on Monday, and so will the market. So, folks, you go out, you stay safe, and we'll see you back here next time.